Bitcoin has just taken out key support levels, so is now the time to be getting concerned about this move to the downside. Let's take a look at what's happening with BTC in the short term, what it means in the long term, taking a look at key resistance levels that the S&P and the Nasdaq are coming up to as they're making up the macro cycle, giving us clues as to what to expect for BTC now that we see it starting to slide past key support levels. Don't go anywhere, hit that like and subscribe to the channel. And top of the video description, you guys are killing it with our free trading workshops. I'll talk about this more, but well done to Crypto Bonds, nearly 400% there, 50% and plenty more to go. All right, guys, let's just start with the overall macro news, the most important stuff, which is important until the next one comes up. The interest rates announcements, federal funds rates. 5.25% was the forecast, that was the previous, and now that's the actual. So this is the first time that the Fed has not raised rates since January of 2022. So it's been about 18 months since the US has remained steady on those interest rates. This might be that little bit of a scare to the market that investors have been waiting for, this whole pivot scenario, this pivot bearish narrative that when the Fed finally pivots, the markets collapse. But like we've covered before, this is absolutely untrue. Not my opinion, it's the facts on the charts. The markets can remain in high territory at high prices, increasing at prices when the Fed pauses, or even if they decide to drop interest rates and then later increase the interest rates. We have seen this happen before. This has happened through 2004, 2005, 2006, pause, all through 2007 until we got to the peak in the market, and then the market started to come down. So one might say, well, the interest rates came down and the market started to collapse. In the mid-90s, we had interest rates going up, down, sideways, increases again, yet the stock market continued to go up. There are plenty of other examples in history that show this as well. We've covered it on the channel, so I don't need to repeat it here, but that narrative of once the Fed pauses and drops interest rates, the markets must collapse, is totally untrue. It does not happen every single time. That is the data itself. So let's move on with what else is going on in the traditional markets. This has made up the bulk of the moves to the upside and might even be an early warning sign for BTC. The Nasdaq is currently less than 11% away from a new all-time high. It was only a few months ago, October of 2022, where it hit its cycle low. We had the recession fears down there. The markets looked like they wanted to collapse further, or at least that was the fears due to recessions and interest rate rises and every other bearish narrative, yet we now see it pushing to fresh highs. So again, this morning, we've seen a new highest close for 2023 for the S&P, a new daily high for the S&P 500, new highest close for the Nasdaq, a new daily high for the Nasdaq, and for Germany, someone better tell them that they are in a recession because it hit a new all-time high, a new highest closing price. If that's what a recession means in 2023 or 2024, you better look out. Looks like these stock markets want to hit new all-time highs even with a recession. So don't let those narratives fear you out again. It is becoming almost a joke when it comes to the recession calls, that sort of stuff. Germany, someone tell them please, they hit a new all-time high on their stock market. Let's take a look at this in an update for the S&P 500. There is the resistance level we're waiting for, around the 4,500 points, up to this top point here around 4,600. So I've got bears attack, the fear will rise. We're not there yet, but it looks like the markets are coming towards a turning point. We're following up on the VIX, the volatility index. This thing has bottomed, had a little bounce away and coming back down again. There will be a pullback. We're expecting a pullback. We're expecting a healthy correction for the stock markets, S&P, Nasdaq, your local stock market, wherever you are around the world. But right now, these are obviously the biggest markets. This is what we're following, and that's the reason why. S&P, like we saw, new highest daily close. This is all still on trend for a new all-time high in the coming months to years. We're not getting too far ahead of ourselves. We are just following the charts, looking at the facts, the data that is getting printed day in and day out. Markets are now taking out previous resistance levels, like we saw from August of 2022. The market is shooting up. So this is getting a little bit fast, a little bit too much for our liking. But remember, markets can remain irrational longer than you or I can remain solvent. Don't fight the trend. At the moment, the narrative is correction and depression and collapse. It's getting less and less, but nonetheless, that is still the narrative, the facts, the data, the chart, what's going on day to day, what the investors are doing, the traders, they are buying up this market. So I'm not expecting the market to break down any key significant levels. S&P 500, I'm going to stick my neck out here on a huge ledge and say it's not going to go below 3,800 points. That's not going to happen. We've looked at that. If I wanted to stick it out even further, some might even say my nose could reach the end of that ledge. We'll let that joke slide. Essentially 4,000-ish points. I probably would say that this market, S&P, probably, okay, won't see under 4,000 points in this cycle again. We've seen it, test it multiple times, seen it get rejected. That one there is just for a bit of a fun of it, but I'm pretty much sticking to this one here. 3,800 points, market's not coming back to that until whatever happens in the next cycle. We'll wait and see. But for now, this thing looks like it's heading up. Same sort of deal for the NASDAQ. We have come up to this resistance point, a nice key area in the market. It's at a key resistance level. This could be a turning point for the NASDAQ. It's back up at 15,200. It was only a few days ago where we have been waiting for this market to hit around 15,000 points for the first time since April of 2022, so over 12 months ago, and it's done it. So the NASDAQ looking very, very strong. I'm putting a lot of emphasis on this because the question of the video is, should we be concerned about Bitcoin's crash? Bitcoin's drop to the downside. Bitcoin's 3% down day. And the point here is that these markets are all in very much bullish territory, although there will be corrections. There has to be corrections. There's got to be healthy corrections here. So the key thing is when we get the corrections, just look back to the key support levels that have occurred in the market. We have our 50% level here, which also was some support, some resistance, support again before the market really bounced away for this last few weeks from the move from mid 13,000s to now over 15,000 points on the NASDAQ. And yes, it's being held up by only a few stocks. That isn't the point. The point is the market is up and the market is going very strong. So sticking my neck out again here, let's say this low right here. This is a key low, probably not going to see under 12,800 points again in this cycle, but I like this one much better. I doubt we're going to see underneath 12,000 points. So basically 11,800. NASDAQ's not going to come back down to that point in this cycle. And if it did fall back down past that key support level, this would churn for a very long time, probably months. We'll see. We'll wait and see if it's years. But nonetheless, this market is still up nice and strong. Same deal like we looked at for just quickly on the German market. This, so you can see it with your own very eyes, a new all-time high price, 16,336. The previous all-time high price was last month, a month ago, 16,332. So 4 points higher, and it's the highest close in history. Remember, Germany announced a recession back at the end of May when it hit 2 negative quarters of GDP growth. It hit an all-time high prices today. So the recession fears, this is one for the playbook. If we see a recession in the US, I'm probably not going to be too concerned. It seems like this is the time in the market where investors are getting back into that risk appetite. So what does that mean for BTC? Where can we go from here? Short term, we're still on the slide, obviously. That's the short term there. Top was April, 2 months now. We are down to a new fresh low for this period, 24,800. I will admit, this has gone a little further than I would like, than I'm comfortable with. However, you know, many times before, we've been looking at a key support level back here, 23,900, and I've been calling it 24,000, just for a round number for the videos. The reason being is we see some resistance, and we've seen it used as support on the way out. So that's a key level that we're looking at. Now, this 50%, we've closed under it for 1 day. Potentially, we have a couple more days here, and then a move to the upside would then cancel any sort of look to the downside. We need to see higher highs, higher lows form. You can see our swing chart is still well and truly down. We want to see the swing start to get back up, form some higher highs and higher lows for the bulls. For the bears, they definitely want to see it get rejected here at 25.3 to test further downside. So if that's the case, then this 50% level no longer. We get rid of that. We move it back to the next key support level, and that was the cycle low. So 50% now would then become 23,255. So a few $100, several $100 lower actually than our key level here that we're looking at for 23.9. So about $650 if you want to be precise on that. So we're looking in that zone for the next support in this short-term downtrend before we could potentially see a reversal. So that's what the short-term fears are for BTC and the short-term support level prices. But like I've covered for a long time at the beginning of the video, the stock markets are up, S&P's up, Nasdaq's up, Dow Jones is up, Germany hitting new all-time high prices in a recession, and many other countries around the world are at all-time highs or trading around the all-time highs, looking for another attempt at those higher prices. We've also seen the US dollar break under the 50% level. It's had a push back today, so it's moved up. It crashed down to 102.6, and now we're just coming back up to test that 50% from the underside, which is a weak sign. Short term, it's a weak sign, but nonetheless, if we start to see this roll over again, maybe that will ease up for BTC's price, and we could potentially see a move to the upside. So, looked at the short term, should we be concerned? This is what we've been covering for months now. Looking back at this video here, which was about 2.5 weeks ago, May 30th, looking at the price and volatility forecast for June. So everything that I've talked about so far has worked out reasonably well. The June forecast was basically an up-down sideways forecast because that is what has happened in the past for June. We've seen the returns basically being netted out here. They're basically an average of negative 0.9 for the end of the month. And so far for June, we are sitting at negative 7.8%. So overall for June, it didn't really show any sort of movement in history. Last year, huge month down. It was in a bear market. 2018, 15% down. It was in a bear market. And then in 2014, which was the other bear market, only had a 2% plus at that point. So really overall for BTC, it's basically doing what it's supposed to do during these two next stages. Basically, I've sectioned these off as 6-month blocks in the overall bull market. The last 3 6-month blocks are the exciting time. That is where a lot of the gains are made in the market, or at least the fast, quick gains, especially for altcoins. But if you're looking at a high percentage return, this is a time that you want to buy up for the stronger cryptocurrencies. Obviously, Bitcoin, Ethereum, some others might make it. And that is where you're going to get the bigger multiples. But that's only if they survive until the next bull market and put in bigger gains than Bitcoin and Ethereum, of course. So right now, second and third 6-monthly periods are doing what we've talked about, just basically grinding sideways, but it definitely feels a lot worse than a grind sideways because not much has really happened over the last several weeks. This market has been trading between 28K and 25.5K, so basically $2,500, a full 10% range. Let's have a look at that. Yeah, 9-10% range all the way up to 28K. So normally in a fast-moving bull market, Bitcoin's going to be doing 10% a day. We even saw Bitcoin do 10% days when it bounced out of the March banking crisis low, which it is still above now. So we saw it do 9% on the 13th, saw it do 9.6% on the 17th. So really, we've been sideways trading in a 1-day range. So any sort of quick moves up or down, the most excitement that we can hope for in a sideways market. So the short-term moves can be quite extreme because of how small the moves are, but for the altcoin trading, you guys have been absolutely killing it, really crushing your short-term trading plans. And you can find a link to this in the top of the video description. Jump aboard. There'll be a free trading workshop coming out very soon, but in the short term, you guys have been absolutely smashing it. Huge congrats to you. 400%, 200, 200, 200, 130, 160, 60% to Mr. Nice. And for one of our new traders here, 100% as well on the XRP short. So in terms of BTC, is there anything to be worried about? If we can answer that question, I don't think so. Nothing has really changed when we look at it in terms of a macro picture, but it's going to feel like that in the short term because we just don't see too much volatility for BTC. And whenever we get a 5%, or like we saw a few days ago, 2.3%, or like we saw yesterday at 3.1%, this is going to bring as much emotion as that we could hope for because there really hasn't been anything going on. The bears, they need this to remain underneath 25.3, and then they need an attack at this key low. This is the turning point here. This is where I will have egg on my face and say, well, bear market is back on. Bulls, absolutely wrong. That is the key turning point down here, $19,500. So keep a lookout for that. I'm sure the haters will. Hit the like and subscribe button if you haven't already. Basically, what I think is happening from this point, now that we've seen this move down of about $6 or $6 and a bit thousand, is that we have longer to grind at these levels before we test 31K again. Think about that. We've got longer to grind at these levels, maybe a little lower, maybe a little higher before we hit 31 or test 31K again. While we remained above the 25K area, there was a possibility of a quicker move over the coming weeks and months, but I think now it's more likely that it's longer. The time is now extended to come back to test that $31,000 range. Thanks again, guys. Check this out. This is all over on Twitter as well if you want to stay up to date with that, and my daily posts on Bitcoin, the stock markets, and everything else is going on. The markets are overall, the macro, bullish. Markets are up, stock markets are up. We have to have pullbacks. We have to have corrections because that's the way healthy markets move. That's the way healthy markets are built. 1, 2, 3, 4, 5 months to the upside. Expect a few months to the downside. Cheers again, guys. I'll see you at the next video. Like, subscribe, you know the deal. Until then, peace out.